Today, we're going to talk about the loan process. Honestly, even though I'm the realtor and I don't really have shit to do with the loan process, a lot of people have lots of questions for me. I'm going to answer to the best of my ability as a non-lender all those burning questions you have about what the hell are lenders actually looking for. The first worry that a lot of people have, I don't want to give that lender my info because they're going to pull my credit. Yeah. They're going to pull your credit. And guess what? You ain't got shit to say about it. We have to know what your credit is in order to be able to get you a loan. Period, point blank, the end. They're going to pull your credit many times during the process. People say, but if you pull my credit, it's going to hurt it. Now, let me just break this down for you right now. If your credit is so low that you're afraid that one pull is going to hurt it, then chances are your chances of buying a house aren't that great to start with. Sorry, I gotta be honest. There's two different kinds of pull. There's what's called a consumer pull. There's also what's called a mortgage pull, okay? A consumer pull is what happens when you go to TJ Maxx and they say, don't you want to sign up for our credit card? And you're like, hell yeah, I do. I'm a Maxinista, baby. And you're like, yeah, let me rack up that debt. Stop right there. That's the problem. A consumer pull means you're always taking on new debt, and that is no bueno. So therefore, a consumer pull is going to hurt your credit more than a mortgage pull. Let's go back over that again. A credit card, opening up a new credit card, is more damaging than figuring out whether or not you can buy a house. Repeat after me. A mortgage credit pull is not going to stop you from buying a house. That's a good kind of pull. Even though you're taking on new debt, it's the kind of debt that helps your overall financial situation. This might be controversial, but it shouldn't be. Let's think of this in terms of medicine. Yes, when you get vaccinated, you inject yourself with a small amount of the disease, but it's in order to be immunized against that disease over the course of your entire life. So yes, it hurts a little bit right now, but it's going to help you over the long term. In fact, if you decide to go all the way to the end of the process and you actually purchase a home, I've seen a lot of people who sign a document that says, hey, look, I'm sorry that they pulled my credit 5 times over the course of the past 6 months. But guess what? You can see that it was all from the same mortgage company and it was me trying to get my credit up to purchase a home. You sign the document and they're like, hey, it's cool. We forgive you. That's the shit I'm talking about. That's why it is so much better to get a mortgage pull than those of you who go and get your credit pulled at every store every time they offer you a 10% discount when you're at the checkout. I know, it's tempting, but don't do it. It's bad for you. It's bad for you, okay? I get a lot of messages to my Facebook page asking me what's the kind of paperwork that I need to apply. Here is the definitive list. It will change based on your individual situation, but this is what they ask for just to get started. First are your W-2s. That is obviously if you're a W-2 employee. If not, they're going to need your 1099. If you're some weird other thing, I don't frickin' know, ask a lender. They need to see exactly how much your employer is paying you per year. That's important information to know if you can support the mortgage payment. Then they're going to ask you for your pay stubs. Why do they need your pay stubs? Let's say that you make $50,000 a year, okay? That's great. But then when they look at your pay stub, all of a sudden it looks like, you haven't worked 40 hours in the past week. In fact, you've worked quite a bit less and you're like, oh yeah, I've been sick, or I do seasonal work and this is the off season. They're going to base the amount that you are approved off of the least possible income that you can make. So if you're a seasonal worker, if you work outside and therefore like during the winter, you're not necessarily bringing in all the money that you usually bring in, that's something definitely to take into account when you're applying for a mortgage. A side note, you need to make sure that you've been working for at least 2 years total. Now, some financial institutions will tell you that you have to be at the same job for 2 years. I know other financial institutions that don't stipulate that, but you do need at least 2 years work history. Another important part of this equation is your bank statements. Now, people will tell me, I'm not giving you my bank statements until I get paid. I won't give you my bank statements until I get my tax refund back. You can give me your bank statement and it can have negative 35 cents in there. I really don't care. We just need to know where to start. There are so many down payment assistance programs, and also you could get gifts from family members. If you are down on your luck right now and you got negative 35 cents, but you have an uncle who's gonna give you $35,000, I don't care. Okay. Tell Uncle so-and-so to show me the money. Also, is he seeing anybody? If you're using any kind of retirement fund through your job, or just in general, if you have a 401k, a 403b, an IRA, those are also important things to include. We're still trying to, what my lender calls, make a story with paperwork, right? We want to see that you are a good investment. So let's say that you don't necessarily make the most money right now at your job, but you used to have a really high paying job and you have a lot of savings. And so if you were to hit hard times, you could easily dip into your savings. You might still be a great candidate. It's also important to shop around for a lender. I'm just going to give you my own personal experience. I have people that come to me every single day that say, hey, I was told by Bank of America I couldn't buy a house. That same day, they're pre-approved through another lender. I know lenders that can help you get where you need to go. And you need someone who's going to go through all the possible options with you, not just the one or two packages that bank has. You need someone that has a wide variety of different kinds of services that they can provide. And that's the person that is going to be able to help you the best. I've been trying to be very uplifting, but let's talk about things that you won't do during the loan process. Here's what you won't do. You won't buy a car. Any realtor out there can tell you that if you decide that you just like, oh yeah, I'm going to buy a car halfway through this, I will straight up punch you in your face. And then I'm going to punch your mama in her face. And then I'm going to find your grandma and I will punch her in her face. You will not buy a car. A car is a deal killer. Why? Because you're signing up for an extra $300 to $500 every month of debt, and it kills your budget. Another thing that you won't do during the loan process is open a new credit card. Once again, we're not taking on any new debt. We want to keep your financial situation on paper as flatline as possible, right? Another big thing that my clients have historically had problems with is the cash deposits of what we like to call the mattress money, or el dinero que tienes ahí debajo del colchón, okay? Let me tell you something. If they tell you all of a sudden, hey, you need $10,000 for the down payment, and you say, okay, let me just go talk to my cousin Pookie real quick and he gonna pay me back that $10,000. You cannot do that. That is not what we call seasoned money. Seasoned money means it has been in your account for 30 to 60 days. Large cash deposits are no good. Now, any sort of deposits that you have going into your account have to be tracked. So if you do ask someone in your family for money, we need some kind of letter of explanation and a bank statement from them. Also, if you do work on the side, like maybe you, I don't know, on the weekends do home improvements for people and they pay you in cash, you need to start making invoices, like actual fancy invoices, to show that this is how much this person gave you and that is why it is being deposited into your account. So if you follow these simple rules, purchasing a home should be definitely on the easy side. It should be totally easy. Next topic is going to be the anatomy of a mortgage payment. Ooh, don't say anatomy. That'll get me excited. But we're going to talk about where the hell is my money going every month. All right, see you later.